Hi everyone, Kimberly Mashek here, your trusted mortgage broker. Today, I'm excited to share a valuable tool that can help you better understand the mortgage buydown option, how they work, and how they can potentially save you money during the initial years of your loan. So, what we're looking at here is a calculator. Super cool to use. I'm going to make this larger here. So what I did here is I started with the purchase price. I just threw in a $400,000 purchase price here just to get us started. And let's just say interest rates, you're locking a 6.5%. That's the rate that you're planning to lock for your 30-year mortgage. Now, when it comes to a 3-2-1 or a 2-1 or a 1-0 buy down, these options can really only be done if you're getting a seller concession. So if the seller is going to give you some money in order to help close your loan, help with closing costs, whatever, you can use that for these buy downs. And these amounts over here are showing you what you would need to ask from the seller in order to do these buy downs. So if you were doing a 3-2-1 buy down, you would need the 8,521. If you were doing a 2-1 buy down, you'd need 5,837, and so on and so forth. And there are limits to how much you can get based on how much you put down, but we'll talk about that here in a minute. Let's get back up here. So a $400,000 purchase price, if you were to lock a 6.5% interest rate in, your 3-2-1 buy down option would be just like this. And it's easier to show you and also talk about it, but the 3% is the first year. So that means you're getting 3% lower on your interest rate the first year of your loan. So you'd be paying on a 3.5% instead of a 6.5%, which would make your payments a $1,742 versus a $2,452. That is a savings of $710 per month the first year of your loan. Same thing with the second year. The second year, you're going to be paying 2% lower than what you locked, which is going to give you this payment. This is your principal and interest payments only. This does not include taxes and insurance or mortgage insurance if you have it. So keep that in mind, and be saving $486.48 for a whole year per month. The third year, you'll be paying 1% lower, which will bring you to a 5.5% instead of the 6.5%. Principal and interest payment savings of almost $250 per month for the whole year. And then once you hit that fourth year, then you're back up to the 6.5%. But a lot of times people use these because they think rates are going to drop potentially. And so they want those lower rates up until then. Or maybe you're supposed to be getting a raise, a promotion, something of that nature. You may want those lower payments. You may want those lower payments anyways, but that's a lot of times why people choose these. There are a lot more perks to this program than just this, so please reach out to me with any other questions. But I just kind of wanted to show you what this looks like. The 2-1 buy down, of course, starts at the 2% instead. So if you were to do a 2-1 buy down and you lock the 6.5%, you'd start with the 4.5% rate. Second year would be your 5.5% rate, and then you'd roll into 6.5%, and so on and so forth. The 1% or the 1-0 buy down is simply just 1 year. So you'd be locking in 6.5%. Your first year, you'd be paying at the 5.5% rate, and then you'd bump back up to that 6.5%. So back real quick to the maximum seller concessions. On an FHA loan, you always can get 6%. That 6% is based off the loan amount. So if we were to do, let me just do a quick calculation here. If we were to do a $400,000 purchase price, we're looking at the 388,000, and 6% of that would be $23,000. So just over $23,000. So you very easily at this purchase price point could do the 3-2-1 buy down and have plenty of money on seller concessions to do that. You're looking at $17,000 for that. So you're more than covered. On conventional, if you put less than 10% down, you are capped at 3% seller concession. So be sure you think about all this stuff, or talk to me or another mortgage broker that you're using, hopefully me, about these options, just to make sure you're covered and that you can use that full seller concession, and that seller concession is going to cover the 3-2-1 versus the 2-1 versus the 1-0 buy down. It's all listed here. If you're putting down over 25%, you can get up to 9% on a conventional loan. VA is capped at 4%, and your USDA at 6%. So this is just a quick overview. I'd love to chat with you about it more if you would like. My information is below. Please reach out. I would love to help you out. Thank you. See you in the next video.